I have been asked on numerous occasions, when is it the right time to obtain a fixed annuity? And you know me by now, I have a tendency to ramble, and I will just give several different scenarios and put an age on each of those scenarios. So I figured this is an excellent opportunity to create a video. I want you to keep in mind that I'm only going to provide a base level of understanding, as we need to factor in several different levels to determine exactly what the right age is for you based on your individualized circumstances. For example, if you have a strong aversion to market downturns, then age is not a factor on when you obtain a fixed annuity. By the end of this video, I'll give you a better understanding so that you can figure out what age is best for you to obtain a fixed annuity. Hi, my name is Darlene Hartman, and I now work for Money Concepts, but I am still a CPA. So for weekly annuity advice, be sure to subscribe to my YouTube channel, and don't forget to hit the notification bell so that you can receive notices when I post a new video. If you are in retirement and you're interested in converting a portion of your assets into a steady stream of income, whether over a fixed period of time or lifetime, if lifetime income, then you would be interested in obtaining a single premium immediate annuity, also referred to as a SPIA. So don't forget, the longer you wait to start those income streams, the more mortality credits you'll receive. But mortality credits shouldn't be the only consideration for a SPIA. So for example, life expectancy would also be an important factor of determining when to start those income streams for a single premium immediate annuity. Now, if you're approaching retirement, let's say age 50 and up, and you have time to allow a fixed annuity to cook or defer for several years, then a deferred income annuity or a fixed indexed annuity may be the right fit for you around that age. Now, don't forget, a deferred income annuity has direct ties to a fixed interest rate, and we are in a historically low interest rate environment. But don't forget where the value of a deferred income annuity is, and it would be compound interest. And what do you need for compound interest? Well, besides an interest rate, you also need time. So if you've got at least 5 years, that can be a pretty powerful tool for giving you those steady streams of income in retirement. I've done several videos to show you how powerful compound interest can be, and also how powerful a deferred income annuity can be in a diversified portfolio that includes stocks and bonds. I've also shown how much more powerful a deferred income annuity can be than a single premium immediate annuity. And again, it's all because of the ability to compound interest over a period of time. And I've noted those videos in the description below. Now, with respect to a fixed indexed annuity, it also has compound interest, but you also get credited a portion of gains from the market indexes. So note, I did say a portion because they're limited by caps, spreads, and participation rates. Another thing to note about a fixed index annuity is you have 100% downside risk protection, which means you can't lose your principal. I also want to note that if you want to receive those steady income streams from your fixed indexed annuity, you'll need to purchase an income rider, and that comes at a cost. There is an annual fee associated with that income rider. I just stated that a deferred income annuity and a fixed indexed annuity would be good for those approaching retirement about the age 50 and up, but there are some situations where age is not a factor in when to obtain a deferred income annuity or a fixed indexed annuity. So there are those people who are averse to those market downturns. I mean, sick to the stomach aversion. Now, some people are okay with those market downturns because they're willing to risk it for the potential of great returns at other times from the market. Whereas then there's those who have a very low risk tolerance and just don't want to deal with those market downturns. And at that point, getting compound interest from a deferred income annuity at any age may be the right fit for you. And then with a fixed indexed annuity, you can get credits of gains from market indexes with 100% downside risk protection. So your floor is at 0% and you can never lose the principal you invested in that fixed indexed annuity. So I do want to note, I did do a video where I replaced an allocation of bonds with a deferred income annuity at the historically low interest rate environment, and then used historical S&P 500 returns over 20 years. And the portfolio that included the deferred income annuity with stocks and bonds actually outperformed the portfolio that consisted of only stocks and bonds. And again, that video is noted in the description below, so be sure to check it out. Leave me a comment in the section below and let me know what you think is the right age for a fixed annuity. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit the notification bell so that you can be notified when I post a new video. So what about a qualified longevity annuity contract, also referred to as a QLAC? Now, QLAC has many of the same features as a deferred income annuity, but I'm going to refer to it as a tax advantage deferred income annuity. And the reason why is that a QLAC enables you to delay the required minimum distributions for a QLAC in a pre-tax account or a traditional IRA, and a deferred income annuity does not provide you that option. So for a QLAC, you can delay the required minimum distributions up to 15 years, but no later than the age of 85. So if you're wanting to delay your required minimum distributions up to the age of 85, then you're not going to purchase a QLAC until the age of 70. So if you're looking for some tax planning strategies and longevity is on your side, then a QLAC may be the right fit for you. Everything I have discussed so far is obtaining a fixed annuity for retirement, but you may need a fixed annuity for purposes other than retirement. Now, a single premium immediate annuity is an excellent tool for bridging an income gap. So let me give you two examples. One would be if you're in between jobs. So when you're working for your employer, you're used to getting those monthly paychecks from your employer. So if you're in between jobs, you can use a SPIA to help you manage your money better in between those two jobs. A SPIA can also bridge an income gap if you're retiring before the start date for the receipt of Social Security benefits, which the earliest date you can receive Social Security is the age of 62. I cannot express this enough. I do feel like for everyone, there is a proper place and a proper amount in your retirement portfolio for a fixed annuity in order to combat those key retirement risks. If you're interested in obtaining retirement insurance in the form of a fixed annuity to provide you financial security, certainty, and happiness in your retirement, click the link below to apply to become my client. Also, if you enjoyed this video, don't forget to like this video, subscribe to my YouTube channel, and be sure to share with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.